Okay, from Jim Rogers to Amitabh Chaudhry to talk about banks and where 2021 is headed for the corporate banking sector. Mr. Chaudhry, good morning. Thank you for joining us. It's the first time I'm interacting with you in this year, in this decade.
Good morning.
So a very warm
Pleasure. Happy New
welcome
Year.
and wish you a happy new year.
Same to you.
I can see that you are back at your office. Can I assume that?
Well, I've started attending office more regularly than before. It was not that one was not going to office at all, but it is still not every day of the week. It is still not, the kind of 10 hours one used to put in, because only that many people are being allowed to come to office. We have to be careful. While the infection rate is down, I think we just want to ensure that our offices don't get infected. So we are doing it slow, steady, deliberately, and in a calibrated fashion. So only people who can come on their own, have their own vehicles, we're asking them to come on a rostering basis. So keeping it slow, I think it's important to do that.
Wonderful. Good to hear that. The economy has made a comeback. Last time when we met, we were debating whether this is pent-up demand, but the pent-up demand has translated into sustainable and into structural demand. What has been your experience at Axis Bank?
So yes, you're right that the demand seems to be holding up. It is no longer a question of pent-up demand. It seems that even if you call it pent-up demand, there's a sustained demand which is visible across the country, across the metros, across rural parts of India. Yes, in many cases it is back to pre-COVID levels. In some cases it is ahead of that. In some cases there's still some recovery which is expected in the next couple of quarters. With the vaccine, imminent and the vaccination imminent, I think the expectations of the people have also gone up. I think India has held up well. There has been no second wave in spite of the festive season. A lot of people were out there in the markets and they were in close proximity to each other. So in that sense, I think India has come out ahead in this whole race of managing this whole COVID crisis. We can see what is happening in Europe and even in parts of Asia and of course in US. So in that sense, I think there is optimism. In that sense, the demand is holding up. And yes, we can look forward to this particular quarter and times ahead once the vaccination kind of takes full steam in a much more positive manner than before.
Looking at the shape of the economy, where for the first time we are in for an earnings upgrade, companies like Ultratech are talking, or Hindalco are talking about a new capex cycle. I'm getting a similar sense from other companies also. Will this year be the big year for the corporate loan book for Axis Bank? A year we've been waiting from last 3 years, but has that period finally arrived?
So, I think some of the signs that you're talking about are very early signs. I don't see large capex being undertaken by private, companies as yet. Yes, obviously there are some sectors where this is happening, but I don't see it as a widespread trend at this point in time. I think, yes, the government obviously is pushing the envelope on this, on the infrastructure side especially, and they're pushing a number of projects across the country to ensure that the overall spend picks up. I'm not seeing that sign in the private side as yet across the board. I think while we as a bank have moved towards conservatism, somewhere it gets confused that we are not keen on growth. No, we are very keen on growth. We intend to deliver the optimum to, an optimum mix to the shareholders. And we have eye on all the good growth opportunities wherever they're available. But yes, as you pivot to a slightly different set of customers or the kind of things that you want to do, and as some of these corporates have actually come out even stronger during the crisis, they have used the opportunity to raise very low cost debt or raise equity. And so the overall demand for credit where you want to lend to has come down. And where the demand of credit exists, you have to be a bit cautious because you do want to ensure that you don't kind of repeat the same. So in that sense, the credit growth for the industry has been muted. Axis Bank has always done better during the COVID times than what the industry has done. We expect to continue to deliver on that going forward. But yes, we are not in the 20-25% growth rate range as yet because the industry is not growing. The demand for corporate book is not there. And we are also being a little bit cautious. Yes, the right opportunities, we are going after it and we are going after it with a vengeance. Absolutely.
So despite a low base effect for FY22, you don't expect the industry to grow at 20%?
I don't think so. I mean, if you look at the credit growth in the first 6 months, the data for which it is available, I think data came out recently for the other months also. It is 6 to 6.1%. Now, with that kind of credit growth, I mean, it is very obvious that the industry is struggling a little bit. Now, this is in spite of the fact that ECLGS has been a kind of a fillip to the industry because, about 1.6, 1.7 lakh crores have been lent under that scheme. In spite of that, the credit growth remains low. And I do not expect it to just take off because, the banks will suffer during the COVID crisis. If you look at the data which has come out from RBI on the amount of loans which are in moratorium, that is close to, 9 lakh crores. So the amount of potential NPLs or slippages that could come through from this number can be high. I mean, we'll obviously come to know about the data over a period of time, but to say that now things are all back to normal and suddenly all the companies are back to normal and so we should just start lending left, right and center, I think will not happen. I think the banks have learned their lessons. They will be cautious, but the right company, the right borrower, individual or corporate or otherwise, I think will get a lot of money at very cheap prices today. So that's not the issue. Issue is for companies who need the money, but I have not been able to raise the equity, or the promoters are struggling a little bit, or their overall operating model is struggling a little bit. That's where the problem in giving additional credit is, and I think it will remain for some time.
When we spoke last, and that was just around October, you said, look, I'm slightly tentative about what will happen to retail delinquencies, and that was normal because that was the shape of the economy. A lot has changed after that. Would you like to revisit that view, or are you still cautious there?
No, I think we have maintained a very steady stand that you will see slippages rise on the retail side because the moratorium is over and the meter has started all over again, and there will be a number of individuals who have either lost their jobs or have seen salary cuts or are part of industries or sectors which have still not kind of recovered fully. And as a result, the borrowers will slip into NPLs, and I expect that to happen in this quarter, in the next quarter. I don't think our stance has changed. In that sense, unless people find ways and means of somehow restructuring the borrowers and giving them a little bit more breathing space, I would expect the retail asset quality to slip in this quarter, in the last quarter and this quarter. But the good news is that because all of us are working on various formula-driven NPL calculations, that, if it is past due for a certain number of days, it automatically slips. There is no leeway there. I think this problem will be behind us in the next 2 quarters because you will recognize whatever has to be recognized, and whatever has survived will be a very good quality book because they have gone through the COVID crisis. So in that sense, the problem will be behind us when we start the new financial year, hopefully.
Even the business is improving. Our understanding is that your provisioning is higher than the peers. Are peers conservative or you are aggressive?
No, I think it was very important for us as an institution to be counted amongst the conservative institutions. I think we have in the past not been able to do that. It was, at least that's the stance I took when I joined Axis Bank, that we want to be seen as a conservative institution in terms of our provisioning accounting policies. And I think that's what we have tried to achieve over the last 2 years. Yes, we are carrying provisions, with 10,600 crores odd, which are over and above what RBI requires us to do. But I think as a prudent institution, it is always important to carry some provisions on your standard book. And I think it positions us better also for going for growth in the future. It makes our capital position strong, and I think it's important for the long-term prosperity of the enterprise itself. So that's a stance which we have taken. We have stuck to that stance, and we want to continue with that stance going forward in the future. It's not a one-time exercise. We want to change the way we look at things going forward. We have changed it, and I don't think we are going to change our view on the conservatism part of our philosophy going forward also.
The last RBI draft guidelines talked about 2 things: holding company structure changes and more openness to corporates getting into the banking space. In next 3 years, if both these laws are applied, and especially if corporates are allowed to open banks, could this change the Indian banking system completely?
Well, when you look at the ambition of the Prime Minister and the government on a 5 trillion economy, and you look at the number of financial institutions today who have the capital to be able to support the growth of the economy, it is quite obvious that we need more banks. Now, these new banks come in the form of corporates or some new licenses given as they've done in the past. That is for the regulator to decide. But yes, I think the industry can absorb more banks, it can absorb larger banks, and more competition is very welcome. Bring it on. I mean, I think it will ensure that all of us are, kept on our toes, and we kind of run faster, run better, and for us to continue to perform for our shareholders and for our employees and for our customers. So I don't see that as a problem. Anyway, I do believe that the Reserve Bank of India will go through its own deliberations internally to decide on what the next steps are. I'm sure they'll consult the government also for the same. And this will take a couple of years for it to kind of fructify in any form or shape. To create a large bank, either with a presence on the wholesale or the retail side, takes many, many years. So it's not a question of, the license itself could take a couple of years. And then for a bank to really start making an impact in the marketplace will take many more years. And as I said, India can absorb many more banks. So yeah, I think we'll leave it to the good offices of the regulator and the government to decide. They know what they are doing. I think they have a very, very, intelligent, smart, and respected set of people who are looking at some of these things. And I'm sure they'll come to the right conclusion.
So what kind of scenario, Mr. Chaudhry, we are in for next 12 to 18 months? Because there is excess liquidity, CASA ratios for all large banks have improved, and credit offtake is low. But those who are taking money from banks, the banks is charging a premium. So are we in for a low growth but high NIM growth patch for banks?
So, in a case when the liquidity is high and the credit demand is low, actually the NIMs will go the other way. The NIMs will be under pressure because you're sitting on too much of liquidity. You can deploy it only on low interest rate instruments. If you have excess SLR, that only earn that much. And if you are kind of not be able to deploy because the credit growth is low, you're not able to deploy with the right kind of assets, then your NIM actually will get hurt. I do expect this excess liquidity scenario to continue for some time. So I do expect the NIMs to be under pressure. Now, the key question here is what the government does in the budget, how do they balance their fiscal situation, and how do they support and continue to support or provide a fillip to the economy so that it comes back with a bank and compensates for the fact that in a way 2021 was a bit of a lost year. So in that sense, when the economy comes back, the credit demand will pick up, investments will start happening, and I think then this excess liquidity can very easily support the requirements of the industry depending on what they are. And in that sense, what I'm hoping for, if not immediately, at least after the next 2 quarters, if not 1 quarter, and I'm including this quarter in it, sometime post-June, I would expect the credit demand to start coming back as corporates start investing in a big way. And obviously the demand for debt will go, and the banks will be obviously very willing to support them in that journey. Now, yes, at the same time, the banks will be cautious. Everyone and anyone will not be able to get the money, but the right kind of promoters will get, I think, adequate amount of money as long as they are willing to create the right kind of projects with the right kind of debt equity structure. So I think the right people will get the money at a very good price. The problem is the promoters who might be in trouble or who might have some issues given some of the acts they've done in the past, etc., etc. Otherwise, enough money is available to support the economy for the next couple of years without a problem. And please, let's not underestimate the fact that a lot of banks have raised a lot of capital. So even the capital adequacy ratios are at all-time highs. So they do have the ability and the platform to lend a lot of money.
The mega trend, Mr. Chaudhry, focusing the interview on big picture rather than getting into specifics, because I know if I ask something about numbers, you would say you're in quiet period. So I want to avoid that chat completely.
Thank you so much.
The mega trend is that UPI payment has been successful, and now more and more digital transactions are taking place. That's a big change in terms of cost and also infrastructure reboot. You don't need that ATM. You don't need the chowkidar outside ATM. You don't need 2 chowkidars who are doing 12-hour shifts outside ATM. What are the changes which will happen because of these mega trends and these tectonic shifts in terms of your cost structure?
So you're absolutely right that COVID has pushed one thing even further than and helped the government push that agenda further. It was not that the government was not looking at the digital side of things earlier, but things like UPI and how even RBI is pushing the overall payment infrastructure in a big way. I think has given a huge fillip and a push to the fact that people are adopting digital in a bigger way. The cost structure, I think the real benefit, the real large benefit of digital does not come in the cost structure immediately. It flows to you only over a period of time. As you rightly pointed out, you don't need that many people. You don't need that many people to even be servicing the customers. So as people adopt digital more, and as you get comfortable that yes, the requirement for people for coming to the branches and to be serviced there, or to serve them on a call center, or to have, as you said, guards, or the fact that because everything is so seamless and no human touch is involved, having too many people involved in operations will come down over a period of time. The structure and the format of the branches will change. You might not need maybe that many branches going forward in the future. So I think all this will flow into the cost structure, but let's not also underestimate the fact that adoption of digital will require a huge amount of incremental investment in technology side. You have to put in the technology to be able to support this digital transactions. You also have to put in a lot of technology to manage your cyber security, scaling, and all of that too. So on one side, you have to spend more money. On the other side, you will see cost saves come through. But end of the day, the curve will trend down. Now, how much that would be is a question of how well you invest, how much are you able to convert your customers to digital, and how successful you are and how seamless you make it for them. So I think the cost structure will be different for different financial institutions, but this is a clear trend. And frankly, the financial institutions should not just embrace it, they should run with it as much as possible. And that's what we are also trying to do in Axis Bank.
So how does one look at cost to income ratio? It's a traditional tool which tells you the efficiency of the banks. This will start changing now. What is in store for Axis Bank because of the disruption now?
So if you look at some of the top private sector banks, their overall cost to income ratio has been trending down for many years. It's not just a recent phenomenon. And I would expect, and I think we have heard some of the CEOs talk about that too, that I would expect this to continue to trend down in the next couple of years going forward, because you will get the benefits of some of the things we just talked about. And this is not the only benefit. There are a lot of other ways and means also where we can reduce the cost. You do get scale benefits in your business anyway, as you become larger and bigger in the businesses, or you gain more market share. So in that sense, I would expect the cost structure of the larger private sector banks to continue to trend down. Obviously, for some of the newer banks, smaller size banks, as they get into new business, the cost structure tends to first reflect a higher cost because they're investing in that business to start with. But over a period of time, it will definitely come down. So you should expect this. I've heard some of the banks talk about a cost structure coming down to less than 35% cost to revenue ratio. And I think that's one of the things all of us are aiming for, but it will take time. It will be a slow, steady progress there. It is not something which can happen in a year. Every year you need to cut some basis points off.
Would you defend so much of churn in some of the senior management of Axis? Just a coincidence?
Well, I think it happened some time back. As I've always said, the churn was based on, I think, three factors. One was that we did take a very clear call internally in terms of some of the people who were not shaping up in terms of what we wanted them and expected them to do. And that was a large part of the attrition which we saw. Then there were some people who thought that they could get better opportunities outside, which were maybe not available internally in Axis, or there was a mismatch in terms of what their expectations were and what we thought they could do. And yes, there have been some unexpected attrition. I think that happened in the first quarter of this financial year. We are behind it. That is all behind us. The replacements have come in. Our business has been executing well. We are a large organization. We have 76,000 people in Axis Bank alone. So yeah, you do sometimes tend to see attrition. I think we have a huge pool of talent available internally, and we are quite well placed to continue to kind of execute on what our plans and strategies are, and not worry too much about some of the attrition that has happened. Yes, of course, I'm the first one to admit that some of it is unexpected.
Axis Bank still called a corporate bank. Why is nobody talking about the fact that you have a large fee-based income, you have a very large retail portfolio, which is a bigger pie of the book. But the market values Axis Bank as always a corporate bank, because the minute you start valuing a bank as a retail bank, the price to book changes. But Axis is not enjoying this. Why is that?
Well, I mean, we have to obviously look at ourselves and ask exactly the same question, which we've been doing for the last couple of years. The biggest factor, there are two factors, I think, where we have not got similar, as you call, price to book as some of the others. One is that we have continued to surprise the market negatively in terms of the issues around our asset quality. I think we are getting it behind us. Hopefully, as I said, when we look at the next financial year, all of it will be behind us. We would have we would have made the adequate provisions and beyond what is adequate provisions and become a more conservative institution, not in just terms of provision, but in terms of the kind of book we have, the kind of people we lend money to, the kind of policies we have internally, etc., etc., what we call the sustainable part of our GPS strategy. So one is that. So, and, it takes time to reestablish that credibility. And, we have to work at it. We have to earn our spurs. And that's precisely what we are doing. Secondly, yes, we were a masters at the on the CASA side. We lost the plot a little bit over the last couple of years. We're getting it back once we, kind of gain that position all over again, and our deposit franchise starts supporting our growth. I think people outside will start seeing Axis as one of the largest private sector banks with a very solid deposit franchise, very solid conservative, policies around how they lend, who they lend to, and a no surprises culture. I think once that confidence comes in, you will, and I expect to see that people will re-rate Axis in terms of price to book, and it should hopefully start reflecting in our share price. We have got work to do. We have got to execute. I think we should just be focused on executing what we have decided to do. It will finally get reflected in price to book someday, for sure.
Mr. Chaudhry, two more follow-up questions. But despite assurance and reassurance and renewed assurance from the bank that the book quality is stabilized, last couple of quarters, something has gone wrong somewhere, whether it's the environment or whether it is your recognition of the loan. So when you say that next year you will start fresh, with all due respect, sir, I heard you say the same thing 2 years ago also.
So, well, we have to keep two things in mind. One, the economy started slowing down in 1920 itself, in the early part of 1920. And that was a bit unexpected. And then obviously COVID crisis hit us. So, and that has hit everyone in the industry. So in that sense, yes, that was something which we were not expecting. And because that happened, some of our, I would say, weaker side of the book did slip. When I say it will be behind us, we did not have some of these excess provisions to manage these unexpected slippages. We didn't have that cushion. We didn't have that capability to absorb some of those unexpected losses. We have created that. And it takes time. You cannot do it all overnight at one go. We have done that. And I think the market has slowly started recognizing the fact that our name is not appearing in some of the problems which are out there, or the size of our problem is much smaller than what people thought it used to be. So in that sense, a lot of real work has actually happened. And, end of the day, it is not my saying or you hearing what I'm saying. End of the day, the market will react and regard us for what we have achieved. Now, once market accepts, yes, what we are saying is correct, and yes, there are no negative surprises, it will start reflecting in our share price. So, my saying is not enough. Obviously, we do the amount of transparency we show in our data and the kind of extensive disclosure we do every quarter, I think is perhaps the highest amongst all the banks. We continue to do it, so we have nothing to hide. And I think it is quite visible to people that over a period of time, the quality of our book, both on the wholesale and the retail side, is only getting better and better. Obviously, taking the COVID impact out of the way. And once we do that, I think it will start reflecting the numbers. As simple as that. Because what we've also done is that we have created formulaic-based provisional policies. So it is no longer in my hands or my CFO hands to decide what we'll provide. Based on how our book is behaving, other provisions will automatically get made. So in that sense, what is out there will happen. There's nothing that we can do about it. And my confidence has only grown over a period of time. Now, no one had predicted the COVID crisis. That has delayed things a little bit. But as I said, COVID has ensured that some of the weaker assets have slipped faster. And that has made our book even more clean than before. Because some of these assets which you would have thought were weak, but hopefully can come out, have actually slipped. And you have recognized them. So now what book you have left is actually even better than what you had earlier.
If I say that Axis has actually used the COVID crisis to provide for extra provisioning, in normal course, if you would have done this kind of an provisioning, investors and markets would have been slightly unforgiving. But you had a COVID crisis and you had an option to provide aggressively and perhaps clean up much more than what you would have done normally.
Well, because of COVID, it was very important that we recognize some of the stresses which are building up in the book and overall in the system. So yes, because of COVID, and we have obviously continued to decide on this philosophy of being conservative, we used this opportunity to, make even some provisions around COVID itself. Now, as and when things play out, and if they don't play out, to the extent we expect it to, and the things are much better, we will look at and evaluate whether some provisions are necessary at all in the first place or not. So, that is a constant evaluation which happens, but we will be careful about reversing things. We will be very aggressive about providing for things. And that's the philosophy which we adopted.
Okay, last question, and this is something which may not be applicable this quarter or even this year. Banks globally are now becoming future ready by adopting the whole concept of fintech. Either they're investing in fintech or they're going big in the fintech world. Soon markets will start asking all Indian banks, by fintech mein what is your plan, given what valuations for fintech companies have become and how banks are getting crunched. What is your plan for that?
So frankly, I think you should give credit to Axis Bank. We were perhaps one of the very few banks who actually went and bought a fintech company free charge many, many years back. So I think we spotted the opportunity first, but yes, it was a wallet company and the whole business model of wallet has kind of gone away. But please understand and recognize that Axis has been at the forefront of some of these things. Not only that, if you look at our mobile app, it's rated the best. The number of customers who are using our mobile app is close to 20%, while our market share on deposits is only 4.8%, on advances is only 5.6%. So Axis Bank has been at the forefront of this. Again, we were perhaps one of the few large private bank which set up a separate digital bank team in itself. And, we have not talked too much about it after setting up the team because it is important to keep quiet and start showcasing what you've achieved rather than say, oh, we have a team and things are looking great. I think over the next couple of years, you'll see more and more coming out of the stable of Axis, which will hopefully, allow us to steal a march over some of our competition. We are very, very firm believers, the management team of Axis, in what fintech or what technology can do to our business. We are investing heavily in it. And when the time is right, we'll obviously share whatever we have done with our shareholders and the market. We can't talk about some of these things too openly. It does not make sense. But it is something which we're investing heavily on and believe in.
Really appreciate your time. I'm glad we covered a lot of ground today from yes, how things have been for the quarter gone by versus how things would move for the decade. Happy New Year once again and wish you a wonderful year and a decade ahead.
Thank you. Wishing you all the same and to the ET now exactly the same thing. Thank you so much for your time.
Well.